How's it going, everybody? It's Stas here. So the markets, well, they didn't have the best day today, guys. It was one of those days. The S&P went down 0.5%. The Dow and the NASDAQ went down 0.4% as the Russell broke even. So today, like we do every single day here on the channel, we're going to break down some stocks, some charts, my thoughts on the markets, and how I'm approaching the markets overall. So sit back, relax, smash that like button if you find value. If you don't, you might as well hit the dislike button or do nothing, right? And check out my Patreon if you want all my real-time buys, sells, call-outs, morning update videos, private Discord access, and more. That's linked down below. And with that being said, let's get right into the video. So we had a pretty choppy day overall. Looking here at SPY, which you all should know at this point tracks the S&P 500, we saw a big rally in the pre-market, followed by a dump-off for the rest of the day pretty much. Well, actually, we did see a pop at market open, and then we saw a dump-off for the rest of the day. And one thing I want you guys to focus on, and that I was paying attention to very closely during the day today and pre-market too, for that matter, is the fact that we took the lows out from yesterday. The lows yesterday were $448.83. Well, exactly, right? I was going to say roughly that number, but it was exactly that number, right? So we took the lows out pre-market. We hit 448.30, and then we saw that rally like I talked about. We ended up pushing up to 452.50 at about 10 a.m. here on the East Coast. So that was about a 4% or a $4 rather spread from pre-market to the high at market open. So we saw about a 1% move there on SPY. And then look what happened. We ended up getting rejected by the main moving average on the 20-day chart, which is the 180 moving average. And then we started dumping, and we ended up closing well under the 50 moving average. We took out the lows again from yesterday, which are at 448.80 roughly. We closed at 448, what was it, 96, 98, whatever. And now we're starting to push down even more in the aftermarket hours. So this looks very bearish, guys. And I mean, overall, okay, fine. You're going to get on my case here. Overall, the chart still looks bullish on the 4-hour chart. It's clearly still uptrending, but on the 5-day and 20-day chart, it looks like, well, mostly on the 5-day, the past couple of days, the bears are well in charge the past 1, 2, 3, 4 days. I think the S&P and the Dow, I mean, it's pretty obvious here on the S&P and the Dow as well, they closed down 4 straight days, 4 straight trading days, that is. So this looks to me, at least, that we're probably going to end up taking the lows out from pre-market today, 448.30. That's probably going to happen by the looks of excuse me, guys, the trend right here. So don't be surprised if we start dumping to the mid 440s, 445, 446, whether it's tomorrow, some point next week. I think that's on the horizon. And going back to that 4-hour chart, if we do pull back to the mid 440s, that's going to put us right by the 180 SMA here, which is the real test, right? Because every time over the past couple of months, we've pulled back. We've ended up holding that trend line. So if we end up bouncing there again, well, it's likely that we're going to rip right back to all-time highs. But on the flip side, if we collapse under the mid 440s, we're probably going to be selling off a bit even further, maybe 435, 440, and we'll monitor it from there. So we're getting some selling pressure, guys, and not to toot my own horn, but did we not call out the bearish divergence? Was that last week before the sell-off even occurred? We did. We called it out here on the channel. I mean, on the 20-day chart, you guys can see we were weakening on the RSI as the markets were still moving higher. That was a key sign that I saw that weakness, selling pressure was likely on the horizon. And now fast forward a couple of days and boom, we're selling off. And for QQQ, Let's see what that's doing. This one's not looking as bearish as SPY is, but now with today's drop of 0.3, 0.4%, it actually closed under both moving averages, and we're getting the start of a death cross here. So look and see for tomorrow and for next week if QQQ starts taking the lows out from yesterday. 378.50 roughly were those lows, and from there we could be seeing further selling, selling pressure, maybe down to 375, 370. That is 100% possible right now. It's not for sure going to happen. Nobody knows what's going to happen, but that is in the cards right now, right? And we got the jobless claims numbers today. Weekly jobless claims totaled 310,000 for the week ended September 4th. Another brand new, fresh low for the pandemic era, and that low is actually well below the Dow Jones estimate of 335,000 and a decline from the previous week's 345,000. So jobless claims looking good. They're getting lower and lower and lower, but like I've said this whole time that we've been talking about these jobless claims the past year and a half, the markets could care less. What drives the markets right now? It's not the jobless claims, it's the Fed, and it's the virus. Those are the two biggest variables at this point in time. The interest rates, the bond purchases, the virus. That's it. That's really it at this point. And I'd put earnings there as the fourth mover of the markets, but it's really just the Fed at this point in time. So let me know your thoughts. Drop me a comment down below, and if you guys are enjoying the video thus far, feel free to smash that like button. I'd really, really appreciate that. And let's start talking about some stocks here. What an epic recovery for GameStop today. Ticker symbol GME. This thing completely ripped. I mean, it reported earnings yesterday. They missed EPS. They beat revenue by a little bit. The stock got down to about 180. It actually got under 180 today in the morning. It got to 178, and we rallied all the way back to 199. We filled the gap all the way from the bottom of this channel on the hourly chart up towards both moving averages. We covered $20 of ground there, over 10%, close to 12% of ground, and we're well within this downwards channel now. We're trading well within it. And at this point in time, and I mentioned this yesterday, and I'm still sticking to it, I don't think the rally on GME is over. That is why I'm still holding on to my shares. I held through earnings, which I typically don't do, and I'm being transparent with you guys here. I did that with GameStop because, quite honestly, it's a smaller position. I'm willing to gamble more on it a bit, so I'm willing to break my rule on that, and I'm holding on to my shares. I held through them, or through the earnings, and at this point, I think the breakout could be around the corner, especially if we start peaking back above 205, 210, which is towards the top of this channel here on the 20-day chart. And it kind of a little bit, it might resemble a bull flag, a little bit here. Not the cleanest looking bull flag, but I guess you could put it in the category of bull flag. You got a big pop from 150 to 230, which is the pole in the bull flag. And then you got the flag right here. And now we just have to wait for the actual breakout out of the flag, which could lead us to new highs, and kind of what I'm in the stock for, quite honestly. So I'm in GME, guys. I'm holding on tight. It looks pretty solid right now. We just got to break 205, 210. So I'm going to put my alert at 205. I'll put one there. Mark is at or above 205, and I'll put another one at $210 per share. So I have two alerts set right there. And not GNJ. Gosh, I was about to say G.I. Joe. I don't know what the heck. I don't know how that got in my head. J&J. That is what we're talking about here. Not G.I. Joe. I'm not 5 years old anymore. J&J, guys. This is one that's gotten decimated the past couple of weeks. And I don't want to blow it out of proportion. It's not that bad, but it went from 179 to 167, which is where it is now pretty much. That's a drop of 7%, so it's really not that bad. It's just a little drop, a little sell-off, healthy pullback, profit taking, whatever you want to call it, on a stock that got pretty overbought. You know, this went up from 162 to 180, which is the all-time high. Very overbought on the RSI. Now we're pulling back. You know, it makes sense. We have a bit of head and shoulder action here. If you guys look within the uptrending channel here, we got the left shoulder, we got the head, and you guessed it, we got the right shoulder as well, and we completed that head and shoulder with today's dump off of over 2%. So I think now that we're getting towards, well, we are at the bottom of this uptrending channel, which has held ever since the beginning of March. Now that we're here, buyers could step in. I think it's possible. I mean, we're already seeing a little green candle forming here after hours. So if you guys have patience, you guys have some capital to put to work, this might be a decent swing, you know, and the key word there is might. And shall I say this as well? I'm not a financial advisor. Please do your own due diligence and please do your own research and don't buy anything based on this video or any video I make. But I kind of like J&J here for a swing opportunity, but keep it in mind that it's not going to happen overnight. This is not the stock that you buy and then next day it's up 10%. This is not J&J. GameStop, it could happen to GameStop. That could happen to GameStop. But with J&J, you're going to have to buy it. And, well, I'm not telling you what to buy, but when you do buy it, if you buy it, you're going to have to wait a little bit, maybe a month, 2-3 months, and then it could pan out. So keep that in mind. But overall, if you have the time horizon, this could end up being a pretty decent play. So J&J solid. UA Under Armour is also looking pretty okay right now. We're in a wedge. Lower highs and higher lows have been made pretty much ever since the middle of July. You guys can see that very clearly here on the 4-hour chart. And today we had a pretty good day, up 2.5%. Closed at exactly $20 per share, and we bounced above the 180 SMA. We held above it, and now we're rallying towards that 50 SMA. So I think this is the breakout spot, $20.50. So I'm going to put my alert right there on Under Armour, and if we start getting out of that point, we break the wedge, you guys know what's next. Well, it's going to be a breakout, most likely. Back up towards those highs. Maybe not to all-time highs. Nobody knows what's going to happen, but at least to $21, $21.50, $22 even. I think that is where we could start pushing. So the next one here is DAL, and we're going to look at AAL as well. The airlines, for some reason today, did very well. DAL went up 3.6%. It's trading above both moving averages, and AAL is now trading above both moving averages as well. And you notice on both of these stocks, we're actually still within a downwards channel on both AAL and on DAL. So I wouldn't jump the gun on these, load the boat yet on a trade until we start peeking out of the downwards channels. And for DAL, that is going to put the stock at about 42, 43. So I'm going to put my alert there, 42.50 on DAL. And for AAL, the break of the downwards channel will probably start occurring. I mean, it will start occurring between $21, $22. So I'm going to put my alert at $21.50 to keep an eye on these airlines to catch a move, maybe a 5, 10, 15% move from there. So I like AAL, DAL, not too shabby there, guys. JP Morgan is another one that's looking pretty decent. It hit an all-time high a couple months ago in the beginning of June at 167. It sold off a bit from there to 146, so it dropped about 12%, got into correction territory, and it got to 146 in the middle of July, and ever since then, it's been a steady uptrend. Now we're trading above both moving averages. We're seeing a golden cross as well, the 50s above the 180 SMA, which is awesome. And recently, about a week and a half, 2 weeks ago, we got rejected at the top of this wedge, right, at about 163. sold off all the way to 157. Now we're back to 159. So I think this, if it starts peaking above the 50 moving average here, which is currently trading under that, we're probably going to make a shot back towards the top of the wedge in the low to mid 160s, and that is going to be the key test. If we start breaking out of 163, 165, this is going to go back to the highs, in my opinion, at 167, meaning from where we are now, there's about $8 upside per share. And let me show you guys this 20-day chart, and let me get my good old handy-dandy channel tool out. You notice ever since the 26th of August, we've been trading in this downwards channel. So if we start peaking out of the top of this at about 160, like I said, 163 to 165 is next, and that is the breakout spot to where we could start going to all-time highs again. So JP Morgan, not too bad. I like it. UNH is another one. I see a clear-cut ascending triangle on this. This is United Health Group. You guys can see clear resistance at 430. That's been the main resistance since the middle towards the beginning of May. So over 4 months, about 4 months at this point in time. And we've been uptrending ever since the middle of June. You know, we gone from 387 to 404. Now we're at another higher low at 415, 414. And we closed right above the 180 moving average. So I think if we see buyers step in here, guys, at about 414, 415, we start pushing back towards 420. That is going to be a sign that the uptrend's continuing, and we might be pushing up to 425, 430 again to test that overall range of resistance, and that is where we as traders could come in and make some money, right? Between 415 to 430. I see a nice little 10-15 point window here on UNH. So I like these stocks, guys. I mean, they're not too bad, or else I wouldn't be talking about them. I like some more than others, of course. I mean, they're not all equally the same, but hey, they're all pretty decent opportunities, I'd say. And I like J&J a lot, but like I said earlier in the video, you need more time for that one. It's not going to pan out in a week or two. I mean, J&J is not that type of stock, but if you have some more time on your hands, you want to put some cash to work, I think it's a decent opportunity, of course, if you do your own research, as always. And the last stock today is Shopify, ticker symbol SHOP. This one went up 2% today. We ended up holding the uptrend here on the 4-hour chart, and we closed right under both moving averages, right? Even though we had a pretty good day, and we held a higher low at 1480, with the previous low being 1450, and the previous before that being 1400. So I think Shopify is well on its way now to the mid to high 1500s. And from there, that's going to be the real test, 1580 to about 1600, which you guys can clearly see. I mean, ever since the middle of June, we failed there every time other than once. In the middle towards the end of July, we went to 1660. Other than that, we failed at 1580, 1600, literally every single time. So I think the trade here would be from 1510 to about 1580. Then I might start taking some profits off the board to be safe and wait for that 1600 break. And if that happens, then we could re-enter for the move up to all-time highs, if that makes any sense. So keep an eye on Shopify, guys, ticker symbol SHOP. And to quickly run down all the stocks again, we talked about GameStop, J&J, Under Armour, the airlines being DAL and AAL. We talked about JP Morgan, UNH, United Health Group, and what we just talked about, Shopify. So if you all found value, hit the like button for me. I'd greatly appreciate that. Subscribe to the channel as well. Hit that notification bell while you're at it. And let me know your thoughts in the comments. And if you guys want more access to me, morning update videos, buys, sells, call outs, access to the Discord, private channels, all of that's on Patreon, link down below. Or you guys can go to StockSurfS.com/Patreon. I'd greatly appreciate it if you guys just checked it out. It means the world to me. And check out the M1 Finance link and the Webull link. Both of those are down below for free money for you and for me. We both get money using those if you use those affiliate links. And that's it. I'll catch you guys in the next video. If you want to see 3 oversold stocks, I made a video earlier. I'll pop it up here. Check it out. I'll see you guys there. Keep crushing the market. Stay safe out there. As always, peace out.